Seth, on the surface, these comments aren't totally surprising. We've kind of known the buying that Tesla has been in, both because of economic conditions, but also, of course, let's just say some of the political conditions as well. What was your first take when you saw these numbers?
Well, we knew with deliveries being down 13% year over year that the financial results would likely follow that and give us more detail. Obviously, for automakers, when you have lower production and lower volumes, you're going to see a bigger profit hit as well. So a lot of the numbers were not surprising. What I was really focused on is what's the outlook. And what's the outlook for more affordable vehicles? We saw a media report earlier this weekend, that said the affordable vehicle would be delayed until either later this year or even early 2026. In the deck I just read, Tesla's saying they're still on track to begin production by the first half of 2025 for the more affordable vehicle. So I'd like to hear more on the earnings call later tonight, what management plans to do if there's an updated timeline for when those deliveries will begin. I also wanted to see if they were going to be still on track with the launch of the autonomous vehicle, the testing they're going to do in Austin, Texas, still on track for that. So, despite a lot of the tariff-related near-term uncertainty, I think Tesla's long-term growth strategy remains on track, and that was reassuring to see.
Well, what does that, though, look like? So, I mean, let's first take the autonomous vehicle for one. I mean, they kind of say that they're still on pace for what they call volume production starting in 2026. So that's still less than basically a year away at most. Do you have confidence that they can meet that target?
I'm forecasting they're going to be launching their autonomous vehicle robotaxi service by 2028. I think that when you look at the full self-driving software as measured by the miles per intervention, meaning when the software system stops working and a human has to take over, they're still well below the 10,000 miles per disengagement threshold that we need to see to offer a robotaxi service. So I want to hear from management tonight where they're at with that progress. But I don't think the FSD software is going to be there by 2026. So I think even if they can begin producing the Cybercab next year, I wouldn't expect to see it out on the streets for another couple years after that, which is how I get to my 2028 forecast.
And so with regards to the other vehicles that may or may not be coming, because there's been a lot of discussion, Seth, about this idea that some of its models now, at least in terms of design, are a little stale, for lack of a better word. They've been out there for a while. Maybe that's a more better way of putting it. So people are looking for whether there's going to be a refresh or something completely new, and something ideally that's not the Cybertruck.
That's right. And we saw the new Model Y, I think, was a big drag on first quarter deliveries because it wasn't out yet in many of Tesla's key markets. It wasn't really out till March in the US, only in a select number of European countries, and just starting to get out in March in China as well. So I think that really dragged down the first quarter deliveries. But now the new Model Y is being produced and being sold in the three key markets for Tesla. I think we'll see in Q2 how much of the deliveries decline was consumers waiting for a new model, how much are consumers waiting and not buying a Model Y for the more affordable model, or is there political risk, and especially in the US and Europe associated with Tesla, that's causing many consumers to seek alternative vehicles?
Well, I mean, just looking at this deck, Seth, I mean, they include a great chart in here that kind of shows you that political risk here. 3 lines, the US, Europe, and China, in terms of its market share of Tesla vehicles by region. All of them have basically flatlined, but none more so than what we're seeing in Europe and China right now.
That's right. And I think a lot of what we saw in China could be attributed to waiting for the full self-driving to be approved. We saw week over week orders immediately started to improve once they received that approval to launch the full self-driving software, because for many consumers in China today, they need a car to have the autonomous driving, the level 2 software. And so if Tesla did not have that approval, many consumers were holding off on Tesla vehicles. So we'll have to see how that market progresses in the second quarter and beyond. For Europe, there's still a big question to me whether consumers are waiting for the new Model Y or whether Elon Musk, campaigning in the recent German elections turned some consumers away. And I think that'll be answered throughout the year, especially in Q2 as well, now that the new Model Y is launched.